We're in a rare window right now, and it's not going to last. If you've been thinking about getting started in real estate, 2026 is one of the best years we've seen in a long time to do it, and there are 5 very specific reasons why. Most people are still sitting on the sidelines, waiting for the economy to feel safe again. But the investors who do well are the ones who move before everyone else does, while the opportunity still exists. Because once this window closes, you're going to see the shift happen really fast. Stay with me because I'm going to show you exactly why 2026 is a great time to get started, and what this moment means for you if you're serious about building wealth, even if you're new to real estate. Let's start with where we are today. For the past couple of years, real estate has been in a kind of a quiet recession. When interest rates nearly doubled in 2022, the market froze. Investors pulled back, deals dried up, and activity slowed to a crawl. But this slowdown won't last forever. We're already seeing early signs that the market is waking up, and I think 2026 is when things start to really move. Now, if you've been watching from the sidelines, waiting for a sign, this might be it. Because when this market heats back up, we think it's going to move really quickly. Now, before I get into the 5 reasons why I think 2026 is such a great time to get started, I want to be clear. I don't believe in timing the market. I believe in time in the market. The best time to get started in real estate was yesterday. The second best time is today. Because this isn't about guessing where prices will go in the next 6 months, or quick flips or short-term speculation. It's about building long-term wealth. It's about tax efficiency so you can keep more of your hard-earned money. It's about freedom, not just financial freedom, but also getting back your time. And all that depends on how early you start. The sooner you get into the game, the more time you give your money to compound. The more experience you build, the more reps you get, and the more relationships you form, and the more advantage you'll have when everyone else starts jumping back in. You don't need to predict anything. You just need to understand why these conditions matter and position yourself to win before everyone else realizes it. So let's break down the 5 reasons 2026 is a great year to get started. Reason number 1, mortgage rates are starting to come down, and that's a critical shift. After 2 years of aggressive rate hikes, we finally see the Fed pause and even start to cut rates. And in late 2025, mortgage rates started coming down as well. That's a major shift from the peak in 2022, when the 30-year fixed rates were well over 7%. For investors, this matters for one simple reason. Lower rates mean better cash flow, stronger returns, and more buying power. And as rates continue to drop, more buyers are going to come off the sidelines. But here's the part that most people overlook. Sellers will come back too. Over the past couple of years, many sellers stayed put. They locked in low mortgage rates during the pandemic and didn't want to give those up. But as rates fall, more of them will be willing to sell. That brings listings back to the market and helps restart the cycle. More sellers plus more buyers equals more activity. In other words, 2026 is when that shift really begins. If you're already in position when that happens, you'll be riding the next wave, not chasing it. Next, let's talk about one of the most powerful tax tools we have in real estate and how it's going to kickstart a lot of real estate activity in 2026. Reason number 2, 100% bonus depreciation is back, and very few high-income earners realize how important that is. This is one of the most powerful tax advantages in real estate, and yet one of the least understood. It allows you to accelerate the depreciation in your property, and in many cases, use that to offset not just your rental income, but also your active income too. That's the income from your day job. We've had students in our real estate course use this to shelter hundreds of thousands of dollars in income. And in our own case, we sheltered 100% of our income for 7 straight years. Most high-income earners have no idea this exists. It's not something you learn in med school or law school or even business school. And yet, it's one of the only ways for high-income earners to legally reduce their taxes and keep more of what they earn. But here's the thing. Tax benefits like this don't last forever. Bonus depreciation was already phasing out before it was brought back in July of 2025 with the One Big Beautiful Bill. And it could disappear again if there's a change in administration in 2029. 2026 is your window to lock it in. And when you pair a tool like this with the right kind of cash flowing properties, you're not only building wealth, you're also protecting it. Next, let's talk about something most investors overlook. Why right now, competition is lower than it's been in decades and how that gives you an advantage. Reason 3. There's still very little competition, and that gives you a real advantage. The last couple of years have been quiet, and honestly, a lot of investors have disappeared. They've been sitting on the sidelines, waiting for rates to drop or real estate to feel safe again. Here's what the data shows. In 2024, sales of existing homes were just 4 million units, the lowest level since 1995. Compare that to over 6 million in 2021. That's a huge drop in activity. And for you, that means one thing: less competition and a whole lot more breathing room. You're not competing against 10 other offers. Many of them cash offers, like we saw during the height of the pandemic. With the real estate market being as quiet as it is, you can actually find good deals. You have time to run your numbers, make calculated offers, without feeling rushed or outbid. This kind of calm, slower market creates an opportunity for those who know what they're doing and have the time to prepare. Because when interest rates keep falling, and they will, competition will spike, and great deals will be harder to find. You want to be the one holding the asset before that happens, not fighting over it afterwards. And once you've got your foot in the door, there's another advantage 2026 gives you, one that most new investors overlook entirely. Reason number 4, this is a great time to build relationships. Real estate's not like swimming or running. It's not an individual sport. You need a team of agents, lenders, property managers, contractors. And during slow markets like this, those relationships are easier to build than ever. I remember back in 2020 and 2021 telling our students, you're getting Olympic level training in real estate. The market was chaotic. It was so competitive and so fast-paced that you had to learn how to move quickly and fight to get attention from your agent. But today, it's completely different, and in a good way. Because the market has been slower, agents actually have time for you. It's the same with contractors and property managers. During this time, you can build the relationships that will support you for the long haul, and you can do it without the chaos. This is especially important for new investors because real estate is a team sport. You can't do it alone. You need the right people around you to be successful, and now is the time to find them. While other people are waiting for the perfect moment, you could be building the team that will help you move faster when the market heats up again. And speaking of timing, let's talk about another market that's flashing warning signs and why that makes 2026 such an important year to diversify. Reason 5, the stock market is overheated. And that makes 2026 a great time to diversify into real estate. By the end of 2025, the S&P 500 was trading at nearly 24 times earnings, well above its historical average. For context, after the 2008 crash, that number was closer to 15. In 2021, it was around 20. Bottom line, stocks today are probably overvalued. And when that happens, it usually means future returns tend to drop. Goldman Sachs, JP Morgan, and Bank of America are all forecasting just 3 to 5% annual returns over the next 5 years. And that's before inflation. Meanwhile, real estate is offering something very different. On average, a good rental property can still generate 4 to 5% in cash flow, plus another 3 to 5% in appreciation. That's a 7 to 10% return. And most investors use leverage, which means your return can be even higher. Now you might be thinking, those numbers don't sound great, but if you know what you're doing, you can actually do far better than that. And in our community, that's exactly what they're doing. Real estate also gives you something that stocks don't. Diversification. If most of your wealth is tied up in the market, you're more exposed than you think. Stocks can drop fast, but your tenants will still pay rent. Your tax benefits don't change when there's a major recession. So instead of riding a market that's already overheated, 2026 gives you a chance to rebalance, to put your money into something more stable, more predictable, and more in your control. So is 2026 a good time to start investing in real estate? I think it's one of the best times to jump in that we've seen in years. But remember, I don't believe in timing the market. I believe in time in the market. The sooner you get started, the sooner your money starts compounding. The sooner you start learning, making offers, building your team, the sooner you start growing wealth that isn't tied to your day job. My wife and I have been investing in real estate for over 25 years. We've helped thousands of high-income earners do the same. And it all starts with that first step. Now, if you want to get started and do it the right way, book a free strategy call with our team. The link's in the description below. We'll walk you through what's possible and help you map out your next steps. Thanks for watching, and I'll see you in the next one.